Hello, everyone. Hope you had a wonderful trading week and a nice long Labor Day weekend here in the States. Let's go ahead and just jump right into it here with the dollar as usual. Starting it off on the weekly time frame view, and as you can see here, as I zoom out, that we have in fact cleared that high point here, which is that 98.70 level. I was indicating that we were range bound, and that upside break above certain levels here, which is basically the blue channel here, would lead us to at least a minimum retest of 98.70, and then onwards up above that would be the 99 to 99.30 level. So that's basically where we are right now. So my mid fib level is around that 99.30 level. That's the next level that I'm looking at as far as resistance. And as you can see here, as I zoom in, we did in fact hit around 99.07 or 08-ish, so very close to 99.10 already. So as far as where we should be heading into the near future, I'm going to go ahead and just drop down to our 4-hour time frame view. And basically, what I'd like to see here, now that we have gone ahead and broken out, is a little bit of a pullback. And basically, that would take us down into around that 98.70 level, 98.60. From there, we should consolidate, I would believe, and then onwards to retest that 99 level, and then looking for that 99.30, 99.20 to 99.30 retest, and then again probably looking at trying to make some kind of level of support around 98.80 at that time, at the previous high, basically near the 98.70-ish zone. So again, looking for at least a near term, a little bit of a pullback, I would say, into around 98.70, consolidation at that point, and then I'm looking for 99.30 to the upside from there. So first, a little bit of a pullback, consolidation 98.70s, and then push into the 99.20 to 99.30 zone. So let's go ahead and save that, continue on forward, and we will move on to gold. And gold also, again, from the last video that I did, was looking for a little bit of a pullback here. We ended up kind of consolidating around those 1530s, and then we got that move up initially to start off the week, which was up near that 1560 level. Couldn't break that level. Very, very solid so far. Again, still thinking that we're going to see higher prices in the coming weeks and months, but for right now, let's just go ahead and look at what we're dealing with here. So let's go back to our weekly. And from the weekly perspective, you can see again that we are having a little bit of difficulty with that mid fib zone around that 1545 level. So I would imagine that we should see at least a little bit of a pullback here into at least the 1505-ish area. That's what I'm kind of thinking right now. Down to around the 1480 level is also a possibility to test that support down here that we have just shy of that 61.8 fib, I'm sorry, the 50 fib level, and then we'll be looking at a further upside move into what looks to be around 1580 to 1590. But near term, looking for some level of pullback. 1505 breaks, then that's obviously going to be the trigger into the 1484, 1485 level. Beyond that, should get a nice bounce from there once we do establish whether it's 1505 or 1480s. That's going to be the support level, and then we should get another rally back. So as far as near term, if we do get that dollar pullback like expected, dollar yen pulls back a little bit, let's say, then that could give gold a little bit of bullishness in the near term. That would take us to basically up into around 1545, I believe. Let me just go ahead and pull that fib in again because my memory is not so good today. Uh, sorry, 15. Yeah, it looks to be around 1550, excuse me, to the upside, and then that push to the downside, if we can even get that high. I'm just looking at my 786. That's usually my rule of thumb, and then looking for that retest of 1525. That ends up breaking. That'll send us back into the support level around 1505. See a little bit of a bounce up in there into around those 1525s possible again, and we'll see if that is the case, because otherwise, if we break that 1505 level, then again we'll be looking for a further push to the downside, and that's going to be around those 1480s, which is basically the bottom here of this wick, around that 1490, 1485 level. So again, it's all very, very possible if we break that 1505 level. That remains to be seen if we do or do not. Again, dollar looks to be pretty solid right now. Dollar yen kind of questionable, could really go either way, and that's the indicator of the amount of fear that we have out there, and that does dictate basically what we see with gold and how it moves. So again, it looks to be like it's under a little bit of pressure, so it's even questionable if we do get down this far into the 1505s, but it's just something that I have to kind of throw out there as levels of importance. So as far as gold is concerned, could still see a little bit of an upshot here up into at least a 1546, as high as 1550, 52 area, and then looking for a pullback. Again, it remains to be seen the depth of this pullback. It's possible that we do break the 1525, head into the 1505, but again, another level of significance to watch for and monitor is around that 1525 level. So it's been holding up pretty well so far. Again, could break below that and head into the 1505s. If that level does break, then the next level that I'll be watching for is down to around that 1485, 1486 level, and again, then should see a bounce from there as well. So that would be basically from here if we did break down that low. So that's what I'm watching for. Again, very, very questionable as to the depth of the pullback here. I think I kind of said the same thing last time. Was looking for that upside. We ended up getting that upside faster than we did get the pullback, so it was kind of like backwards, so to say. But it is what it is. We have to kind of adjust our outlooks based upon what the market actually does, and then kind of look for our opportunities within the relative levels of support and resistance, etc., etc. So, in either case, if you're looking to be going short, going long, just make sure that you are using your stops. I can't stress it enough. Seen too many people over the years just blow their accounts. I've blown my accounts. Back in my younger trading days. It's a horrible feeling. It's completely unnecessary. Just identify the trade setups. Have that risk reward ratio set up, have a good solid plan, and obviously, stick to the rules and stay disciplined. So as far as gold, should see a little bit of a bounce here, at least up into around the 1545, 1546 area. Possible for a further extension into 1550, 1552, and then a pullback into that 1525 level. Possible push into those 1505s, and that'll be a level that I'll be watching very, very closely for either a pop back up into test those 1525s and further, or if we do a little bit of a pop into the 15, 20, 25 level and then further push down into the 1480s for a nice reset, consolidation, and drive to the upside yet again. So we'll see how that all plays out. Again, just like anything else right now in the market, looking pretty questionable aside from crude oil, and I'll get to that in just a second. Natural gas here had a pretty solid week overall. If I can get the chart loaded, that'd be great. So natural gas again had a very, very strong end of the week here, broke out to the upside, and like I said in my last video, I was waiting for it to kind of do something. Still kind of waiting for some level of confirmation as to whether this move has any follow through or not. So far it's been rallying very, very nicely, but just to kind of go back to the weekly view, like I like to reference earlier than later. In this case, I did it a little bit backwards, so forgive me. But in looking at this overall move, you can see that we've basically just come up into the supply zone. So this is where things get interesting. Either we hold, outside of around 2.35 and start grinding back up, then we can look for a retest up near the 2.5 level. If we fail, obviously, the 2.35 level, then we'll be looking for, again, another push at minimum into the 2.16 level. So let's just drop into our daily time frame view. Let me try to move that fib level over a little bit. Oh, I already did it. Again, so this is what I'm looking at here is, whether price can hold itself above that 2.33, near that 2.35 level, breaks that or consolidates and then breaks to the upside, then we have a nice squeeze going as high as 2.5. Conversely, if we fail, which I do believe is still on deck here, as there has really been no resolution to the trade war, and that is obviously putting pressure on prices, crude as well as commodities and everything else under the sun. So there's a lot of anxiety, a lot of emotion, a lot of uncertainty, etc. So as far as energy, natural gas, crude oil, looking for potential if this does fail back into at least the 2.21 level. That breaks, obviously we'll be looking further down, 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 and back into around 210 to revisit, maybe even down low near 203 or below. And the reason why I say that is I've been saying it for a few weeks now that typically what ends up happening is we get these nice little rallies as we continue to try to find our bottom, like we had back in 2015 down to around 197, and then rallied all the way back up into the 2.38, 2.39 area, and then got slammed down again. So it's too early for the bulls to really have a clear victory. Did they um, have a nice little breakout earlier in the week? Yes, they did. It was, whatever. It is what it is. It's not an area that I wanted to get involved in. Better opportunities elsewhere, such as with crude, I believe. And again, I'm very curious to see how this plays out, because if it starts consolidating here, then there will be a nice long opportunity and squeeze up into the 2.5 level. Conversely, if she ends up failing at this level, then that's going to be the bear's cue to kind of come in and slam this again. Could get pretty ugly. As I've mentioned in videos in the past, looking for support retest around that 195 to around 190 possible, and then again a revisit into 208, 210, maybe 211, and then another continuation move down to revisit the 1.6 level that we had hit back in 2016. So that is still very much on deck. Very much have to see what happens here with the 2.33 consolidation. Let's go back down to the daily. So it's very, very crucial that we get some kind of clarity. 2.33 holds, then again the squeeze will trigger to the upside here. 2.49s all the way up into 2.5 possible. So very, very on the cusp of making a decision here, one way or the other. Bulls versus bears. The battle is obviously going to be on very heavily here for natural gas, as it has been for crude oil as well, which the bulls have been getting slaughtered every single time so far. So I believe that that is going to continue with the OPEC news that's come out. So now that I think I've covered natural gas, pretty much extensively at this point, I would say the key level again, watch for that 2.33 level. If it holds support, then that'll be the cue for the upside test or break and squeeze into 2.5, 2.49 up into 2.5, I should specify. Conversely, break unable to break, continues to resist the 2.33s, then you're looking at a return to at least the 2.22s. Going to get a little rocky in here with new resistance reestablished at 2.27, and then again continuation move down to at least the 2.1 level, probably going to be pushing down even harder than that. So we'll see. That seems to be some kind of trade related headline that would invoke such a drastic pullback. We'll see. So let's go ahead and move on. Lastly, with crude oil, no real changes here with crude, and just further confirmation of downside push here as we look out into what happened over the weekly course of time. You can see that once again we have put in a lower high, lower low, did finish out the week on a green note, but again we're still resisting quite well near that 55 level. Just make sure that looks like it's a little bit off, just a bit. Has to be precise. So again, the major resistance happened to be at that 38.2 fib level around 55.50. That seems to be breaking down. I'm expecting a mid fib test here, which is going to be around the low 53s, 53.20, 53.08ish. That'll be pretty much target one at that point in time, and then looking for a little bit of a bounce at that point in time, and then continuation move still down to retest the support level around the 50.50 to 51.50 level. Again, it's going to be kind of chopping around in here for a little bit as it's been tested repeatedly in the past. Bulls will come in again to try to save this move, and again probably in the next week or two we should end up cracking to the downside here, start looking for 47s. So hopefully everyone is protecting themselves. It's getting more and more volatile out there, not just in commodities and with energies. It's just all over the place with indices, especially if you're trading currencies. Same type of a situation, very volatile out there. A lot of anxiety taking place, a lot of emotion, also confused algorithms. So everything is just kind of in flux. So make sure, I have to stress that, make sure that you're protecting yourself. Use your stop losses, stick to your plan, be disciplined, and have a plan in place. Make sure that you can measure what you're looking to trade, that setup, and it makes sense on a risk reward ratio basis. So anyway, I hope everybody enjoyed this week's video. It's very difficult to kind of get a clean gauge on what's happening. I think crude is probably the cleanest one that you can see that we should be really breaking to the downside pretty aggressively. OPEC came out with news earlier today saying that basically they would abandon their whatever it takes and start increasing their output. So crude should start seeing some further weakness, especially with the China tariffs that have just been gone into effect, I believe, as of yesterday. So be very interesting to see what happens across the whole entire space, being the indices, commodities, metals, whatever it may be. It's going to be very, very volatile. Make sure that you're protecting yourselves. No need to ever blow up an account. Just make sure that if you're wrong, own up to it, reevaluate, monitor for new setup, and then get back in the market and just continue to be robotic with your decisions. Have a wonderful and green trading week. If anybody has any questions, comments, or concerns, you can always obviously make a comment at the bottom of the video. You can email me at thetradersperspective@gmail.com, and I'll be glad to have a conversation with you if you have any questions regarding anything that I've said. So again, have a wonderful and green trading week. Post next week's video over the weekend as usual. Take care.